Delta Airlines Q2 earnings just came out, and we're going to have a little talk about Carnival Cruise Corp. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're going to be speaking about two fan favourites, Delta Airlines and Carnival Cruise Corp. I try and speak about these companies once every 2 or 3 weeks just because we spoke about them so much back when I had maybe 1,000, 2,000 subscribers, and I know there are still a lot of people invested in these companies and particularly interested in these sectors, so I like to cover them every now and again. But the thing I really want to speak about today is Delta Airlines Q2 earnings and what the outlooks of the airline industry as a whole is looking like for investors right now. Delta Airlines was my favourite and biggest holding for months, and now I am completely sold out of my position. I do hold a very small position in Southwest, but it's not even worth mentioning. And then after we speak about Delta and I give my thoughts on the airline industry as a whole going forwards, we'll speak about Carnival. So right before we do get into the video, can I please ask you to smash a like? The support lately has been absolutely insane. I appreciate you all so much. Hit that juicy red button if you're new around here and join the family. We're uploading 10 or 11 videos every single week, people. And lastly, drop me a comment down below. Let me know if you're in Carnival or Delta Airlines, and let me know what your cost basis was and where you think the stock's price could be in the next few years. And with all that being said, guys, let's get straight into the juicy information. So starting it off with my first love in the stock market, we're looking at Delta Airlines. On the 1 month chart, we can see that it's been going down. I mean, 14+%. Now we go to the 6 month chart. They were hit incredibly hard. I'm sure if you've kept up to date with airlines, you're very aware of this. I mean, they were down as low as nearly 70% at one stage. Now from the bottoms, which were around the $19 mark, Delta went on this very fast, very aggressive run up, and they went up 92% in the span of a few weeks. And this is when I personally started getting a little bit afraid, okay? Because back then, there wasn't really any positive news. There wasn't much at all. The TSA checkpoint numbers were all still terrible, which we'll get into in a little bit. The virus was far more prominent than it even is right now. There was still very few flights going. Everybody was afraid to fly. And we saw nearly a 100% run to the upside in a matter of a few weeks. I got very worried and I started selling out of my position. So I sold half of my shares initially, and only recently I sold the other half at a very small profit. I think it was about 5-10%. I honestly don't remember. But things just aren't looking fantastic. And I'll get into why lately, okay? But let's just have a look, okay? Before all this even happened, they were, let's call them a $60 stock, and that's being a little bit generous. Right now, they're at $26. Best case scenario, it's going to be a couple of years before they get back to where they were before. And keep in mind that when they get back to where they were before, they're also going to have a considerable amount more debt on their balance sheet. So best case scenario, from $26, we get up to close to $60 within 2 years. That's best case scenario realistically. That's not offering a very promising return when we look at the Q2 earnings. I mean, there's a lot of companies who could give you a potential similar return with less risk involved. And remember, this is coming from one of the people who was the biggest bulls on airlines out there. Then you really start looking into it and you look at the 5-year chart, and I mean, in 5 years there was only 38% growth. That's not very nice growth. And it wasn't just Delta. If we look at Jets, okay, pretty much the airline ETF, they were the same, okay, close to 40% growth in 5 years. And while they were here, they were paying very nice dividends as well. Those dividends won't be making their way back for at least a couple of years. So all in all, the total return on investment you could be looking at with Delta isn't fantastic. Now, Delta Airlines Q2 2020 earnings call. Motley Fool is a fantastic place to get transcripts of earnings calls. Now this is very long. A lot of it is just a Q&A. We're going to try to go through the important points. So Ed Bastian, the CEO, a man I have to say I do like a lot. So we are now 4 months since the pandemic, and nearly $4 billion pre-tax loss that we just quoted reflects the severe impact of the virus on the company and the industry. And I mean, it's fair. It's not like Delta has been hit particularly hard. Everybody has, and when we looked at the ETF Jets, we can see that. Since demand bottomed in mid-April at less than 5% of our normal traffic, we've seen a small but welcome uptick in passenger volume. And this is being driven almost entirely by domestic leisure travelers, or those flying for essential reasons. Not a lot of business flying is going on right now. Business class flights bring in a lot of money for airlines. They're expecting that the revenue for the September quarter will be only 20 to 25% of what we saw last summer. So I mean, the next quarter going forwards also looks horrific. Business travel, which typically provides 50% of revenue, has not yet returned in any meaningful way. And this is a concern of mine going forwards, okay? And it's not something that I took into account enough back then, is the fact that, you know, a lot of places won't need to send as many people on business trips. I mean, Zoom stock hasn't gone up 250% at its peaks in 6 months for no reason. It's gone up because it's going to be a very important service going forwards. And so it could be a long time before business travel gets back to its previous highs. So they're expected to go up 10% from the June quarter. And I have said here, for the September quarter, we expect our seats available for sale, which accounts for our 60% load factor cap. That's not good. Will be 20 to 25% of last year's level. So I mean, it doesn't look good. We didn't expect it to look good, but the forward-looking statements don't look good either. One thing I'm very happy to read: the infection rate among our customer-facing employees, those who spend their days working on board our aircraft and in our airports, is well below the national average, providing another solid data point on the safety of air travel. So this is good. You know, if more and more people find out about things like this, more people will be, you know, more inclined to travel, and happy days. So they've ended the quarter with $15.7 billion in liquidity. So their daily cash burn for the month averaged $27 million a day in June, which is actually very good considering that it was $100 million a day in late March. So they've done a great job at raising liquidity and cutting their daily cash burn rate. A large part of what happened though was more than 40,000 Delta people volunteered to take short-term unpaid leaves. So obviously that's a lot of wages not being paid. They're also permanently retiring more than 100 aircrafts this year, and a few more points money-wise. So this from the Executive Vice President and CFO Paul Jacobson. Revenues declined 91% and there was a $3.9 billion pre-tax loss, one of the largest in Delta's history. They substantially reduced the flying fuel expense. You would hope so when the planes aren't flying. What are you doing, just lighting the fuel on fire in the airport with the boys? Now, Delta in relation to other airlines, okay, quite nice. They've raised $15 billion in new liquidity at a blended average rate of 5.5%. The fact that they can get this at 5.5% shows that their balance sheet is in an okay position. Even with no improvement in our cash burn rate, this equates to 19 months of liquidity. Very nice. Do I think they're a good investment right now? I still don't think this is going to be the airline that goes bankrupt. I really don't by any means necessarily, and I do think it could potentially be a good long-term hold. But the main question you have to ask yourself is there better, safer places to put your money that could yield a similar return? And I personally do think that there is. I mean, the best case scenario is more than like a 125-ish% increase in a span of 2 years. Now, of course, the very long-term potential is there. Of course it is. It's always going to be there. And they just opened up 5.44%. Well done, Delta. This is coming from the mouth of somebody who absolutely fell in love with Delta when he first started looking into them. Now, so be it. I was very new to investing when I did fall in love with this company. But a lot of what I said back then does still stand today, and I do still think that airlines obviously play an extremely important role in our future, and I don't think they're going to disappear off the face of the earth, and I do think they're going to make considerable new highs in the long term. But me personally, there's places I'd rather put my money. Mainly my big tech stocks. I don't think it would be out of the realms of possibility to see a similar growth in a company like Apple or even Facebook. Not that it's necessarily the most likely thing in the world, but I wouldn't see it outside the realms of possibility. But I would see it outside the realms of possibility for them to go bankrupt. Whereas that is a very real possibility with pretty much any airline right now. No matter how good things look, we don't know how things will look in the future. If I wanted to get involved in airlines right now, honestly, I would more than likely just invest in the Jets ETF. I'm not currently invested in any ETFs, but I would feel a lot safer put my money here than into any individual airline. And I am still in one airline with a very small position, and that is Southwest. I just think they have the best balance sheet by far, giving them the best chance of survival. They've been the least volatile this whole time. So if you're a degenerate who just wants to trade the highs and the lows and try make some money here and there, this isn't the company for you. But if you are a long-term investor who wants to get in an individual airline stock that more than likely is safer than the majority of its peers and still offers fantastic return, I think Southwest is the company for you. And then everybody's favourite, Carnival Cruise Corporation, up 8.88% at market open. What do you mean? Why are you doing this? Okay. 1 month chart, it's been bad, okay? Down 15%. Until pre-market, it was down 22.6%. 6 month chart, obviously horrific, okay? Still down nearly 70%. Literally one of the worst performing companies out there that a lot of people still consider to potentially be a good investment. 5-year chart, pre-crash, down 0.4%. Now these guys' Q2 earnings came out a few weeks ago, but I don't think I've covered it on the channel. Second quarter 2020, adjusted net loss of $2.4 billion. Total revenue for second quarter were $0.7 billion. lower than $4.8 billion in the prior year. They've secured over $10 billion in new capital, aka debt at very high rates. Their overall blended interest rate is just 5%, which actually is quite good in fairness to the company. But their shorter term debts aren't as nice. Now they do say we are confident that we are prepared for a wide range of scenarios for the next 12 months. So that is obviously a good thing to see if you are an investor or considering even getting in at these prices. So additional cash conservation efforts combined with future liquidity measures will enable us to sustain ourselves beyond 12 months into late next year, even in a zero revenue scenario. So I mean, yeah, again, that is something nice to see. They've reduced our cash burn and have a more efficient fleet once they do resume cruising. They've aggressively shared less efficient ships. A total of 13 ships are expected to leave the fleet, representing nearly 9% reduction in our current capacity. So this can be seen as both a good and a bad thing. It means that when they're back to normal, they're not going to have as many ships to go on sale, but more than likely they're going to replace those with new, more up-to-date, more efficient ships. Now, some forward-looking statements. Okay, it's particularly reassuring to see that approximately 45% of the 2021 book positions are guests that are new to the brand, with the remaining 55% of guests being brand loyalists. And it's also promising to see that 55% of 2021 booking volumes during the last 2 months were new bookings. I think that Carnival could be a really good, very long-term investment. But me personally, I don't want to have my money tied up in a company that I think is going to really struggle over the next couple of years at the very least. It's similar to Delta, and I mean it's similar to most companies. If you put money into a company, the large majority of the time, if you leave it there for a long enough period of time, it is going to pay you a decent amount. The hard thing is trying to pick the right companies, trying to pick the good companies that will give you back more money. If you are an individual stock picker, that's the hardest thing to do, is to pick the right companies. That's why a lot of people don't even try to bother. I mean, it's a lot of work for something that might not even pay off at all. That's why a lot of people just go for ETFs, your S&P 500 and things of the likes. But I like picking my own stocks. I mean, this is the most interesting part to me. For me, Carnival, it doesn't make enough sense, sadly. I can understand why you would buy. I could even understand why you would buy at this price. I mean, in the long term, they're still the biggest player in their market by a long shot. So when things are back to normal, they should be able to pick up where they left off. But when will things be back to normal? And how much more debt are they going to have to take on to ensure that they're in a good position when things get back to normal? So not too much has changed for Carnival. I mean, the last time we spoke about them, they were probably around this price point somewhere, to be honest. But that's where I stand on them. I still wouldn't personally invest in them at this price. Again, I can see why you would, but I just think there's so many better options out there. And that is our little airline / cruise line sector update that we do every 2 or 3 weeks. If you have watched till the end, I always say it, you are a true legend. I appreciate you so much. You are genuinely helping me and the channel out so much, so thank you so much. I really appreciate you. I do really hope that you were able to enjoy the video. If you did, please do drop it a like and drop me a comment down below. I love interacting with you guys and hearing from you guys. I hope you all have an absolutely fantastic day. I hope the market treats you well. I will see you for tomorrow's video. Peace.